Hi, Donovan. Welcome to the PowerTalk Show powered by Business Talks Weekly. Thank you so much for accepting our invitation and joining our channel today. Can you tell us a bit about your professional background and what led to the creation of Ethos Benefit?
Yeah, sure. So I'm in financial services, which is a huge array of different services and products that people could use, anything from personal financial stuff to life insurance, all the way to what I do. But originally we were a securities firm, so we were financial advisors, and now we have transitioned to be fiduciary employee benefits consultants. So we're working with large employers in the United States on controlling their healthcare costs.
Wonderful. Thank you so much for that background. So, can you explain to me a bit about what is fiduciary? Like, how does it help build trust between employer and employee?
Yeah. So super important. So this is something that exists on the financial side. So for financial advisors, there is two different types of licenses that you could get that fundamentally changes how you're going to operate and work with clients. So one kind of level of financial advisor licensing is going to be like a series 6, series 7, and that's going to be commission based, compensation. So you're selling different products at different rates to clients. It's not always transparent, right? They don't always know what they're getting. They certainly can have some questions and some concerns. And it's not unusual to see some products pay 5%, whereas others in the market might pay 1%. And I can tell you from, over 15 years in financial services, the best products, regardless of what we're talking about, insurance, financial, or otherwise, the best products pay the lowest commissions because they don't have to pay a big commission to get to market share. So a really good example was like in my first 2 years of financial services to kind of illustrate this point. So when I started, I loved the industry. I just didn't know what sector I was going to work in. What I started with was Medicare supplements. So this was for people over 65. And I was working with an agency that was captive, which meant I was working directly for them. I didn't have access to the open market, so I could sell my clients any type of Medicare supplement. I was just working with this one company. And, starting, I didn't know anything about the industry, pricing, the competitors that the company had, none of that. We got a compensation of about $650 per Medicare supplement. And then at the end of the year, our local newspaper, the state newspaper, put out basically like a price ranking for all the Medicare supplements. And there was somewhere around 40, and the company I worked with was 38th on price. So it was one of the most expensive on the market. And when I saw that, I was like, wow, this sucks. I don't want to do this. So I left that company. I decided to go independent so I could access any type of product I wanted. What I didn't know was how that worked. So when I started selling the best price Medicare supplement, which was United Healthcare at the time, my commission went down to $125. So from 650 per sale to 125. And that's very much how financial
That's a
services
big
work.
drop. Yeah.
Yeah, huge drop. I mean, I was selling one a day and I was like, this is great, right? All I need to do is one of those a day. And I was pretty happy. And then suddenly I go and I didn't know, and I'm selling these and the commission comes back $125. I'm like, oh no, now I got to sell a lot more. In financial services, in commission-based sales, that's often how it works. The best products, the best stuff out there in the market doesn't need to pay the highest commission, but as somebody who's going to be commission-based, that's kind of where those conflicts arise. So sometimes
Absolutely.
you're captive to where you don't know that and you only have access to those. But certainly in other cases, you do understand those, but you're being incentivized by the insurance company or the financial institution, not the client. So that is the concept that fiduciary advising fixes. And there's a couple basic principles, but one is that you're going to be completely transparent with your compensation. So you're going to flip that commission based to a fee base. So you're working directly for the client. You're going to be completely transparent in your advising and your compensation, and you're not going to have any conflicts of interest that might change giving anything but that individual or company the best advice out there for them. And that's what I ended up doing in securities. And I was working with companies on Ks and pension plans, and I loved it, had a great business, was doing really well. And one day I realized that while I loved the clients I was working with, they actually had a larger problem in the healthcare space, so in their employee benefits. And those same conflicts exist in healthcare, and they still do today. And that's kind of what Ethos does today is in try to fix that by bringing fiduciary advising over to the healthcare space where it doesn't exist. So there's currently no legal or license requirement like there is with financial advisors that doesn't exist on insurance licenses, but we basically created that standard for ourselves with our contracts to our clients directly and the way we structure our compensation.
That's very interesting. And what you do actually creates a good amount of impact to the employers and the employees itself. But you also speak something about premiums, how the premiums have gradually increased over the years. Can you tell me, like, how does the system work, and how can an employee and an employer save on premiums?
Yeah, so a lot of things. Obviously, it's a complicated space. I always say the first thing is that alignment. Companies have their own and said their own businesses that they're trying to run, right? They're not trying to understand and run the healthcare part of their business, but unfortunately, they do have a healthcare component to their business. It's usually the second or third largest cost in their business. So the first thing we try to do is clear up the alignment. So if you're hiring somebody to help you make those decisions, coming in with that fiduciary basis, eliminating conflicts in compensation, because the strange thing about the way we currently hire somebody to fix this problem is the employer hires them, but they're not the one incentivizing them. And that commission conflict is inherent in every single employer I talk to, and has been for the past 12 years now, right? So that's kind of step one, is getting on the same basis, and at very least understanding the broker relationship and understanding, how do you get paid? When do you get paid more? For what reasons, under what timing? Because often, and it's disclosed sometimes if they read it, but they'll get paid more for premium growth, which is what we don't want, our costs going up, and also plan retention, meaning that when the premium went up, that broker kept you with the same insurance carrier. So that certainly is the start of all the problems. And then the other thing we try to say is, still going along that alignment idea, is making sure you have a benefits committee within your company. So at the very least, that should be CEO, CFO, and human resources, because it is a big problem. And if you have those three personas in the process, they're all going to ask different questions. They're going to be aligned on the goals and what they're looking to do, how they're measuring it, what's sustainable, what was the past 5 years, what was the average premium growth, what is that going to look for 5 years from now, is that sustainable? So creating that committee internally and then also aligning it externally will start to get you better processes.
Makes sense, absolutely. And Donovan, I also want to understand, like, how do aggregators play a role into it? Because I want to talk a little bit about tech. There are so many aggregating platforms, and with AI coming into picture, there's some online platforms which actually allow you to compare and provide you the right solution. So how do aggregates come into the picture here?
They really don't on the employer space, because it's a much bigger, more complicated scenario. But what is important in this space is access to claims data, right? So when the premium goes up, the insurer will say, well, it was because your claims were high. And the secondary problem is they never want to be forthcoming with what that means. They don't want to measure it. What are those claims? Who incurred them? What was the procedures? So that's kind of the most important part, is aggregating data and making sure part of that equation, if you're making a carrier change, you need to know that you're going to have an improvement on your data and claims access than from where you are today. So that should always be part of the process. If you are considering a change, send me a sample report. I need to see what my financial data is going to look like if we decide to move to you guys, and then understanding, like, what frequency does that come out? Because fundamentally, that is where the decision-making process for all this stuff starts, is it's in the data and the claims. I mean, it's a crazy process, but essentially, I mean, what the company is doing is they're opening up a separate checking account for healthcare costs, and they just fund it to this insurance carrier. And then often that insurance carrier gives them no transparency back as to where that money is actually going, what the problems were. And you start to see all kinds of stuff when that happens. Surely you can imagine errors, hospitals overbill and have claim errors, high costs against benchmark, all this kind of stuff. And I think employers forget that while employers call it health insurance premium, the insurance company calls that revenue. So they're not looking for ways to decrease that revenue by fixing mistakes, by paying hospitals less, by paying drug manufacturers less, none of that. So data and claims is really the most important thing when we're talking about aggregating and using AI to help make decisions.
Very interesting, Donovan. And as you mentioned about claims, what is the ratio percentage of claims getting accepted? And, there might be a case where, there is a certain procedure or a medication not required, but it is prescribed because, you are insured within that component, and then the hospital or the clinic prescribes them. Do that occurs frequently?
Yeah, we don't actually see a ton of problems with that. If anything, it's the opposite. The secondary part of the equation, sometimes there's a one-sided narrative from hospitals or providers saying, well, the health insurance company declined this procedure. The second part of information I would want to know is how much are you trying to charge for it? Because are you charging 10 times what Medicare would pay you to do the same thing? So we do see those kinds of conversations often when we have good controls on the claims data. We'll have a claim come through. Here's a great example. So we had a claim come through. It was a skin graft on a pinky. That's it, just a skin graft on a pinky. Hospital tried to authorize that claim. They're scheduling the procedure. Employee comes in, here's my card. They pre-authorized the insurance and it comes back. They wanted $87,000 for this skin graft on a finger, right?
My God.
He's not going to go under, nothing like that. They're going to give him a local anesthetic in his pinky and do a little skin graft. But they said, don't worry, we'll give you a 30% discount. So now it's going to be $53,000, right? Still way too high.
Yeah,
Still like
exactly.
crazy too high. So the plan said no, right? And it's not because we didn't, yes, he's going to get the skin graft, but that is way outside the limits. So what we did was we called his doctor. His doctor, the same surgeon, had admitting privileges at a ambulatory surgical center a couple miles down the road. We scheduled the procedure there, no delay in care, same physician, different building. We paid less than $3,000 to get that done,
Wow.
right?
And that's a huge difference.
Huge difference. You only need a couple of those to change that narrative at the end of the year about your claims are too high, right? So that more so is a conversation that we're having on a daily basis, which is just these excessive multiples of what hospitals try to charge. I mean, that's really what I'm talking about when I'm talking about reducing the cost of claims. It's not about changing the conditions that people have. We can't change their health or what comes up or what they're dealing with. What we can change is the variable costs that both hospitals try to charge, but also the variable prices that are set through pharmacy benefit managers for drugs they're getting. So, it's not like other businesses, like a restaurant or a service where you might stop and say, wow, I think that was like 20% too much. Like it was 30% overpriced. No. When a hospital does it, it's 10 times overpriced. It's
Yeah.
18 times overpriced. And that's what we're working on. We don't need to affect the whole, we don't need to create rules and make all these restrictions and hoops and things for all employees to go through. All we need to do is catch those large claimants and we can make a difference on that premium cost.
Absolutely. And very interesting story, very interesting numbers. Donovan, I want to understand what's your vision for the next 3, 5 years with Ethos Benefit? Where are you looking at? Where are you heading?
Yeah. So, one of the things that made me change from being a securities advisor and the registered investment advisory over to healthcare was just seeing the first case we did and understanding the impact on every employee's check. Like that was the big difference to me. So that's kind of our mission. We're always trying to bring these changes to as many American workers as possible because while we have a lot of healthcare access in the United States, the costs are the highest in the world, without a doubt. Right. And it just is exceedingly a problem every single year. And companies are coming to a breaking point. Employees are coming to a breaking point. So our mission is just to continue to work with larger employers, more employers to kind of fix this throughout the country. Our office is based in Florida, but our employees are throughout the United States and we serve clients throughout the US. So biggest thing is continuing to get that message out there, helping employers understand like, they have a fiduciary duty to their employees. We've seen that with K lawsuits, healthcare lawsuits have started. They are very prevalent now. They keep popping up. This is going to continue to be a problem. So we want to mitigate that risk for employers, but also help them reduce their costs and give their people better healthcare, right? We talk to companies a lot, and as we go through this process and explain it and show them results, we often hear this sounds too good to be true. But it's not. Like, it's common sense. It's how they would operate any other part of their business. And that's what we try to bring to the table. And we're just going to keep trying to do that for more and more people.
Wonderful, and wishing you all the luck and success. One final question, Donovan. What piece of advice that you received change your perspective professionally and personally?
Piece of advice. So many. Gosh, put me on the spot with that one. I think for me, it's not really a piece of advice, but it's something I've noticed and it goes with the fiduciary concept. Because when I started it in securities, this was back in 2015. It was not very popular then. Most advisors were commission based. I went that route, and now we're doing it in healthcare, and almost no one is doing it. And what's really changed my perspective and what's awesome is the more compliant I am with doing the right thing for my clients for the right reasons, the better I do. And there's this thought process in my industry that that's not possible because they set up so much compensation and bonuses and indirect compensation, all this stuff from the insurance carriers, that they can't really see or understand the process of what it would be like to eliminate those conflicts. And all they can see are like the bonus checks that wouldn't come. But I can tell you from experience, like the better I do, like the better I do for my clients, the more honest, the more transparent, the more processes I give them to help understand the stuff, the better we do. So I'd say kind of finding that why for anybody, that purpose will probably change your business and how you operate.
Thank you, Donovan. It was a wonderful conversation. I have absolutely learned something from it. Thank you so much, and it was a pleasure to have you.
Awesome. Thank you, Navin.